Ladies and gentlemen, in this video, we're going to be going over some big news for Rezolve AI today. The stock is down about 3% at the time of recording this video, but it's really algorithmic in nature, okay? Because the news today is very positive. The other thing I want to tell you from the start of this video, we've reset, okay? The stock, $6.87 at the time of recording this video, largely holding on to almost all the gains we've seen so far, but the RSI is now back down to 74. Which, why is that important? Well, we have earnings on October 1st. That's the big catalyst. That's money in the bank, right? That's when we're going to get the guidance raise. That's when the stock is going to go mainstream, I believe, in retail investors' portfolios, okay? It's going to be like Tempest or Applied Digital, SoundHound, BBAI. You get the idea, right? Rezolve is going to be one of those top companies. It's going to be hard to ignore, but you don't want to have an RSI at 90 heading into a really strong earnings report. You're going to see a potential sell the news event or not as good of a rally, right? Now we're in a position to work our way up again heading into October 1st to potentially get back into the $8 range, but the RSI is not going to be at 90. It's going to be in the 80s, right? So you needed to see this reset of momentum before October 1st. I talked about this a lot on the channel and in many videos, and we finally seen that. But ladies and gentlemen, we're going to cover Rezolve, all the news you need to know today. We're also going to take a look at what happened in the broader markets today. All of your breaking news as well. Ladies and gentlemen, if you have not done so already, hit the like button, subscribe to the channel, and check out that link down below in the description of this video to come join the trading community if you want to get involved with stocks like Rezolve. Now, I go out and try to find these opportunities before Wall Street does. Okay, I'm going to show my position as always in Rezolve, but we're doing this with a lot of other stocks in the AI field, in the small cap arena, going out, finding the value before Wall Street does. And that's kind of what I've grown to be pretty good at. Now, not a recommendation, not financial advice. You could lose all your money. Don't be a jackass, clearly. But if you want to come trade with us, come join us, check that link out down below in the description of this video. But with that said, let's get into today's episode. Okay, so the news today. Rezolve AI eliminates private placement warrant overhang. It says here, Rezolve AI, an AI-powered comments solutions provider and strategic partner for Microsoft and Google, has announced the resolution of an all-private placement warrants issued in December 2024. The warrants, originally part of a $15 million placing with a 5-year validity period, have now either been exercised or have lapsed. What does this mean? All the warrants people talked about, especially when Rezolve was $2 to $3 a share. It seems like less people talk about that now. But all these warrants, everyone was, warrants, dilution. It's done. It's over with. It's not a problem anymore. Now, these warrants were for $6, okay, at the $6 mark. So back when the stock was $2 when I was buying it, I was like, to hell with the warrants, that's $6. The stock has to go above $6. You're guaranteeing me I'm going to double my money at least before we even have to deal with that? Fine, okay? The time has come. The stock is above $6. The warrants have been completed. There is no more additional dilution from warrants, okay? It says the early expiry or exercise of these warrants was triggered by Rezolve's share performance, effectively removing a trading overhang that had been created or creating market uncertainty. This development simplifies the company's capital structure and is expected to enhance investor confidence in Rezolve's equity story. It says here the positives. Elimination of warrant overhang simplifies capital structure. Early resolution of warrants indicates strong share performance. Negative. Previous $15 million private placement may have caused dilution. Here's the bigger picture, though. Okay? It says these private placement warrants, which were originally valid for 5 years, were forced into early expiry or take-up following Rezolve's share performance and are no longer outstanding. Their exercise and expiration clears away a warrant overhang that created unnecessary market noise, reinforcing investor confidence in Rezolve's equity story. Here's what the CEO just said on this. He says, quote, "This is an important step for Rezolve," said Daniel M. Wagner, founder, chairman, and CEO of Rezolve AI. Quote, "By clearing these warrants, we believe that we've removed a distortion that was weighing on the market, simplified our capital structure, and created a cleaner runway for investors. With this behind us, all attention can now be on our growth trajectory and value creation." Okay, Rezolve has said many times now, okay, that they feel their company should be trading at a much higher valuation relative to other, peer companies, right? That peer companies are trading at significantly higher valuations than Rezolve. Okay, well, Rezolve feels like one of the reasons why potentially was this, these warrants. So they've got rid of the warrants. Okay, no longer an issue. And although I think it's simply, Rezolve is simply trading at a discount to other AI stocks, not because it's a bad company. I think it's better than your mainstream AI companies today. I think it's better than SoundHound, better than BBAI from a fundamental business perspective and a growth trajectory perspective. I think the reason the stock is trading at a discount is because it's undiscovered. Not a lot of people know about Rezolve and what they're doing. If you watch these videos, you do, but most people don't. I've done volume analysis on Rezolve compared to other companies. If you look at, any given day with Rezolve is seeing like $100 to $200 million worth of trading volume. Okay. If you look at any of the other AI stocks I mentioned in this video, they're doing well over $1 billion a day, 5 to 20x more than Rezolve. Even when Rezolve goes up, 20%, has elevated volume. The dollar amounts just are not even close to comparable. Now, October 1st is going to be the big day. Because if you follow the story, you know this, but let me get you caught up to speed if you haven't been following the story from the start like we have. So basically, long story short, Rezolve spent 9 years developing the product, developing, what they are currently selling into the marketplace. They went public via a SPAC in August of 2024. Okay. So nobody touches SPACs. You have to understand this. SPACs are untouchable virtually by Wall Street. So a lot of retail investors didn't touch it. A lot of institutions didn't touch it. Almost no institutions, okay? They started selling their products on the market earlier this year, at the start of the year, okay? They set a target for $90 million in ARR by the end of this year. That is annual recurring revenue, okay? They hit 70 million about mid-year and said they were on track to exceed well over 100 million by the end of this year. With that simple run rate, and as the company has said, growth is accelerating, they should be anywhere from 150 to 300 million in ARR for this year. The real upside comes in for next year's target. If there's something like 500 million or 700 million or $1 billion in ARR, that's where things are really going to get exciting. Okay, especially if, retail starts to pick up on this company or whatnot. A lot of people as well, when they look at the filings, they say, wait, this company has zero revenue? That was not actually true. They were forced to spin off their China business, which was about 100 million in ARR. Okay, the SEC didn't like that all their revenue came from China. They spun it off. So essentially they went public via SPAC with $0 in revenue. That was not the case, and I think that gets confused sometimes. So we're here now. Their earnings on October 1st, and we're about to get a big guidance raise. We don't know exactly what. We don't know if we're going to get a guidance estimate for 2026, kind of ballpark numbers. If we do, that's also going to be big. Now, another part of the story that you really just have to hear me say, or you're never going to see this in articles, you're never going to see institutions talking about this, but is really a big important part of the story here for Rezolve and the upside that I view as inevitable. Obviously, I could be wrong. I'm not a financial advisor. I'll share my position in just a moment. But 40% of shares are owned by insiders. Okay. 10% is owned by institutional investors, which is still virtually nothing. So I doubt there's a lot of, selling there. 14% is owned by private companies, and the rest is owned by retail. So there's like anywhere from 70 to 80% of the float that doesn't really trade. That's why Rezolve goes up, 21% on 29 million shares of volume, on $150 million worth of volume. Okay. You can see a very large increase in the stock, even on pretty low volume. What do you think happens if 200 million shares of volume comes into the stock? Stock's probably going to go up 300% in a day because there is not a lot of shares out there. When you also consider the short position, right? Because there is a little bit of a short position in the company. What do you think is going to happen when shorts want to buy back the stock that is hard to come by? It's going to drive an exponential rally in the stock. Short interest is only 11%, but that is really amplified by the current share structure and ownership structure, okay? That's why you have cost to borrow fees minimum 63%. Cost to borrow max 90%. Utilization at 80.42%. Short score at 79. Only with 11% short interest, okay? Now, you did have one big trade today. It is a February 2026 $5 call from hedge fund or institution worth $4.5 million with a price here of $3.08. So the break even on this is $8.08 for the stock. If Rezolve is not above $8.08 per share by February 2026, this firm is going to lose $4.5 million they just put in this trade. Okay. Now, this is also partially that trade, but other trades are flagging Rezolve today with some unusual option activity. It says here, Rezolve AI, call volume above normal and directionally bullish. It says bullish option flow detected in Rezolve AI with 30,711 calls trading, 3x expected, and implied volatility increasing almost 2 points to 166%. February 2026, $5 calls. Okay, that trade that I just showed. And September 25th, 750 calls are the most active options, with total volume in those strikes near 19,800 contracts. The put-to-call ratio is 0.05. There's almost no puts on Rezolve. Earnings are expected on October 1st. Just this trade alone that I just shared is highly unusual. That's a lot of money to bet on a big move in a short amount of time. It's funny too, when you look at today, you have one order totaling $4.47 million. This is the interesting flow sentiment. Positive order value of 100%. On Wednesday, you had 20 different trades totaling $3.04 million with a positive order value of 100%. And over the past week, you've had 26 different interesting trades from hedge funds and institutions totaling $10.72 million with a positive order value of 100%. Basically, everyone is just buying calls on on the company. Now, that's clearly not to say that you should just blindly go out and do that as well. I actually don't like the options versus just buying the stock, okay? And I have some of the options. I have these Rezolve 250 calls for February 20th, 2026. I have 15 of them. They're currently going for $435. It's basically like dollar for dollar at this point, right? It's just like you have 1,500 shares of exposure, but again, you're not really getting a huge like discount. If you can buy 100 shares for $683 and you're paying $435 for the options for only a couple of months of time, I just really like, what's the point? You might as well buy the shares, right? Current market value here in the options, $6,525. Current market value of the stock in this portfolio, $88,918. Total return, $52,000, up 142%. Average cost, $2.82. 13,000 shares. Okay. In this portfolio, 75,000 market value. Unrealized return, 44,000. Up 144.62%. Invested for 90 days and 11,000 shares. As I've talked about before, but if you are new here, let me just break it down. That's 26,300. Let's do it in simpler terms. That's 11,000 shares plus 13,000 shares. Okay, plus 1,500 shares in option activity exposure. Okay, well, add on to that 1,000 shares in Webull, 1,300 shares in Thinkorswim. Current exposure, 27,800 shares in Rezolve times $6.82. Currently have about $189,000 of exposure in the stock. Okay. So I'm exposed. If I'm wrong, I'm going to lose money or lose some profits at least. Okay. If I'm right, we're going to make a crap ton of money. That's my skin in the game here. But I really need everyone to understand, if you're looking at the stock today, down about 4%, what we got today was great news. Fantastic news. Okay. It's not bad news. The warrants are over with. There's no overhang there. And I think the company is doing this strategically before earnings on October 1st. They're planning, I believe, in coming out with some huge guidance, and they want the stock to go up alongside how it should with a massive guidance raise. They don't want an overhang of potential dilution to keep a lid on the stock. Again, 40% of shares are owned by insiders. They are going to make money alongside you. Their interests are aligned with yours. And keep in mind, I am not a financial advisor. I am not your financial advisor. This is obviously risky stuff when you're dealing with a company that just started selling their products to other companies within the last 12 months, right? But if you follow this story, you know for yourself whether or not this company suits your investment style or investment goals. And if you have no idea, then contact financial advisor for more insight. But you could lose money, and I want to make that very clear for everyone. Now, in broader market news today, you had initial jobless claims that came in at 231,000. This is seen as one of the most, up-to-date leading indicators of the labor market. So this coming in lower than the expected 240,000 is a good sign because it shows that things are not all bad out there. Philadelphia Fed Manufacturing Index came in at 23.2. The estimate was 2.3, and last month was negative. So a big rise there as well. Philly Fed Business Conditions came in at 31.5. The estimate was 25. CapEx Index came in at 12.5. Employment came in at 5.6. New orders came in at 12.4, which was a lot better than the negative 1.9 number we had last month. Prices paid came down sharply. Last month, you were at 66.80. Today, you're at 46.80. That rarely ever happens. Okay. for prices paid component of any of the regional Fed data. So I think that was really good as well. We are obviously coming off of Jerome Powell yesterday, and I want to make this very clear, okay? The dot plot matched markets' expectations for this year in terms of how many cuts we're going to get, okay? Wall Street was expecting 3 cuts this year, a cut in September, a cut in October, and a cut in December. Great. That's what the Fed said they plan on doing, okay? Cutting 3 times this year. That matched markets' expectations. Where a little bit of the disappointment was for 2026. But I think it's very obvious when you listen to Powell and you understand the Fed, there is no certainty in that outlook. It's going to depend on what happens with inflation, what happens with the economy, right? That's going to determine how many cuts we get next year. And Wall Street, although they were pricing at about 5 cuts, so at least 2 cuts next year, maybe 3 cuts next year, you know, that's not a super big problem, again, because it's going to change with the data, right? So it really just confirmed likely an end of the year rally for markets, that we are starting a serious easing cycle. And the Fed, even in the dot plot, raised GDP estimates. They lowered unemployment targets, you know, unemployment rate targets. So, you know, when you put that together, again, as I talked about in the last video, like, we should expect that the markets are going to take this well. Keep in mind, though, we are in September, which is a very weak seasonal period for stocks. Specifically, yesterday started the worst 10-day stretch for markets in any year, any time of the year. So this is the worst period, and we're still working higher. I think that just shows how strong this market is, and really how many bears there are. Because, you know, a lot of people are bearish, and they're just forced, you know, to jump sides, right? Because stocks continue to go higher. And the last thing you want if you're a fund manager is to start losing clients because you're bearish, right? And you're wrong. Now, look at this. This is pretty incredible. I can't recall I've seen this before. Bullish investors are at 41.7% in the new AI investor sentiment survey that came out today. Last week, you were at 28%. So that's a big jump, okay? The historical average for bulls, 37.5%. So you're higher than the historical average for bulls. Look at this. Neutral investors got crushed down to 16.0%. Last week, you were at 22.5%. Look at bearish investors, still outweighing bullish investors at 42.4%. I've never seen over 40% bulls, 40% bears on the same week. Like, there's a lot of people that are bullish and a lot of people that are bearish. The historical average for bears, 31%. It's honestly, like, incredible. I was not expecting to see this morning, but just having that many bears on markets likely continues to fuel stocks to move higher. Now, here on the day today, the CNN Fear and Greed Index is coming in at 62. Yesterday, you were at 57. So getting close to that midpoint of greed, but not quite there yet. Market momentum is greed. Stock price strength, extreme greed. Stock price breadth is neutral. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand is greed. Junk bond demand currently in fear. Also in the news today, Kalshi reports that searches for credit card debt surpassed the 2008 financial crisis. Trump seeks to speed up large power projects to meet AI demand. Trump says if oil price drops, Putin will have no choice but to end the war. France's President Macron says a return of U.S. sanctions on Iran will happen with an interview with Israel's Channel 12. The Trump administration is asking the U.S. Supreme Court to allow the president's firing of Fed Cook. And the White House defines the AI race with China. U.S. Supreme Court to hear arguments over legality of Trump's tariffs on November 5th. The EU now plans to phase out Russian LNG more quickly after Trump's push. Deutsche Bank has increased its year-end S&P 500 target to 7,000 from 6,550. Trump on ABC's Jimmy Kimmel says should have fired him a long time ago. And Trump says, I don't regret inviting Putin to Alaska. Trump says he may do an extension with China, but they are close to a deal. Trump on TikTok says he is speaking to President Xi and hopes to finalize something. As I've talked about before on this channel in the last couple days since we've heard about this TikTok deal, I don't think China is willing to sell TikTok just for the sake of money, right? I think China probably wants some kind of lower tariff agreement as well, which could be a positive for markets. Trump says the US is getting a fee plus for making the TikTok deal. Trump says TikTok has tremendous value. Trump on the Russia situation says, I hope we're going to have good news. Trump says that stocks will do much better as time goes by. As I've said before on this channel, I think Trump secretly wants the title of the strongest stock market of any presidency, right? I think that's just kind of a personal goal that Trump wants, and I think Trump's going to do whatever he can to make sure that happens. Trump says wind power is an expensive joke, a disaster. Trump told UK's Prime Minister to stop immigration situation to use military if needed. UK's Prime Minister Starmer says he discussed Israel-Palestine issue with Trump, agreeing on a need for peace and a roadmap, notes recognition of Palestine must be considered in context of a broader peace plan. Trump on Israel says, I want the hostages released right now. Trump says he told Charlie Kirk he had a good shot of being president. And Trump says he will be going to the Kirk funeral Sunday. Trump says, I thought Ukraine-Russia might be the easiest of the issues, but it has been complex. Trump says that Putin let me down. And again, Trump says the stock market has hit a new high. Trump on UK's state visit says tech deal will ensure UK and US lead next great tech revolution side by side. Trump and President Xi will hold a call at 9 a.m. Eastern Standard Time on Friday, according to the U.S. official. And per CNBC today, sales of heavy trucks are falling like the U.S. is headed for a recession. So let me know your thoughts on all of this down below in the comment section. Hit the like button, subscribe to the channel if you have not done so already. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.